Thank you for joining me. I'm Alex, and I want to talk about HP today. So, they used to be called Hewlett Packard, but apparently they just go by HP now. Now, what they do is they make computers and printers and apparently 3D printers, which I hadn't heard of before today, but obviously pretty interesting business to get into, and they have a lot of experience with similar things. So kind of makes sense to get into that. Now, I bought some HP shares back when Xerox said that they really want to buy HP. And, I bought them for under $20, and then this current situation happened. And so they're worth less than what I bought them for. But still interesting, still, well, I wouldn't say goodbye, but we'll get to that. Current price $15.14, which gives them a market cap of $22 billion. Current dividend yield 4.7% with a 33% payout ratio. I think that is extremely nice. Wouldn't really bet on that staying that way in the current situation, but it very well might. Revenue $59 billion, earnings $3.2 billion, which gives them a PE of 7-ish, almost 7.5. Forward PE also 7, but it's probably under 7, the PE is rounded down, forward PE is rounded up. Still very nice either way. Total assets $33 billion, total liabilities $35 billion, which gives them a total stockholders' equity of negative $1.2 billion, which is double last year's. And overall, I do have a problem with this balance sheet, and it apparently is getting worse. And overall, I really don't like that. Obviously, they do have enough earnings to cover the dividend and everything. With a PE of 7, they could be paying 15-ish%, which obviously makes sense with the payout ratio that I have and the current dividend yield. Anyway, so overall, I would say that for a growth investor, I really don't think there's enough growth here. And as you can see, the revenue growing by about 2%. So not great growth. For a dividend investor, I think it's pretty interesting, especially with the buyout offer from Xerox. They're both dividend payers, and regardless of what happens there, I don't think it's going to be a terrible buy. And for a value investor, you're going to have to really ignore this balance sheet if you want to buy this company. I chose to ignore the balance sheet when I bought them, and I just figured that since the PE, which was, I think, even lower back then, I thought that they have enough money to cover their liabilities, and I don't think that they're in any big trouble. But I really hate this balance sheet, so I don't think that I would be buying this company if I had to make the same decision today. With that said, if the buyout offer from Xerox goes through, I think that it becomes very interesting again. So that's it for me for today. If you like this video, make sure to subscribe and putting out more videos every day before market open. I hope you have a successful day.